Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, July 13th, 2021. And here is our top story. A student loan giant will stop servicing federal loans, and loan forgiveness is approved for more for-profit college students. Well, joining me now to discuss this and a lot more, Betsy Mayotte is the president and founder of the Institute of Student Loan Advisors. Betsy, as always, great to see you. Thanks for joining us again this morning.
Yeah, good to see you too.
I guess before we jump in, how are the boot camps going? I know when we last chatted about a month ago, you had extended the camps. Are people getting in financial and student loan financial shape?
Yeah, the June camp went really, really well. July, we ended up pulling off from the public sector because a private organization wanted their group to have it all to themselves. So I think we'll probably post another one around September, right before the student loan waivers are due to end. So people can certainly... the feedback's been great.
Yeah, it's great. And people should certainly go to freestudentloanadvice.org. They can check out all the work that Betsy and her team are doing. I never miss it. It's always a great read. Betsy, let's talk about student loan, federal student loans. And there's a giant in the industry that is kind of stepping away from some of the personal loan forgiveness process. And I think people are kind of up in arms, but we're going to kind of want to pump the brakes here because this is really just a bill. What can you tell us?
Well, there's a couple things that have happened over the last couple of days regarding public service loan forgiveness. The first, as you mentioned, was Fed Loan Servicing, who is the Department of Education vendor for quite a few, I believe it's 8.5 million federal student loan borrowers, but they also were the public service loan forgiveness servicer. Now, they've had some operational issues over this process in the past that's caused some anxiety with borrowers. But what happened last week is they announced that they do not intend on renewing their contract, which is due to end in December of this year, which means that all of those accounts, including the public service loan forgiveness borrowers, will be transferring to another Department of Education vendor or vendors. We don't know if they're going to give them all to one or whether they'll split them up. We also don't know if there's also going to continue to be a single point of contact for PSLF borrowers or if they're going to sort of spread that across. I know that's causing some additional anxiety for borrowers, but I just want to point out that student loan account transfers happen all the time. So 99.9999% of the time they go really smoothly. The borrower just has to make sure that they know who their new servicer is. What I'm telling your listeners that if their account is with Fed Loan Servicing, they just need to make sure they open their mail over the next couple months to make sure they knew who their loan servicer is and so on. The other thing that happened, and this just happened yesterday, is the House committee issued their appropriations draft bill. And in that bill, there's language that would actually allow payments made under a federal family education loan program loan to potentially count towards public service loan forgiveness, assuming the borrower ended up consolidating into the direct loan program. That would be huge. I've run into so many borrowers that didn't understand that they didn't have the right loan until it came time to apply for forgiveness, and they were disappointed is an understatement. So although this is just a bill, so we don't know, we have to wait for the Senate version, they have to do their negotiations, and it has to come to a vote, which likely all won't complete until the end of the year. I've got my fingers crossed, and this could really help a lot of borrowers that were sort of pushed out of PSLF inadvertently in the past.
Yeah, and let's separate issues. Let's talk about this bill a little bit more. And can you just give us a description about the personal student loan forgiveness program in general? And I think it's really, under the new Department of Education head, it's really getting a fresh new look. And it sounds like Congress is looking at it too.
Right. So the way public service loan forgiveness works. So when Congress introduced it and Bush the Younger signed it into law back in 2007, the purpose of the program and this is practically a word for word quote, was to encourage people with a passion for public service to be able to enter into as well as stay in a career of public service and not have their student loan debt to be a barrier. So the way it works is if you have a certain type of federal student loan, which is a federal direct student loan, you make 120 payments under a payment plan that's based on your income or the 10-year standard plan or a mix of those things while working for an eligible employer. And an eligible employer is any government employer, so that's federal, state, local, or tribal, or a 501c3 nonprofit, or there are some other nonprofits that aren't 501c3s that can qualify, but those are sort of few and far between. Once you do that, your remaining balance, including interest, is forgiven, and it's forgiven tax-free. So we've worked with thousands of borrowers on this program, and we're seeing more and more people get approved for it. The biggest issues with public service loan forgiveness over the years is lack of education for the consumer, understanding how the program works. So for example, not realizing that not all federal student loans qualified, and you had to, if you didn't have a direct loan, you had to consolidate into the direct loan program for it to count, which is one of the things that Congress, the House committee bill, appropriations bill, looks to try to rectify. Other people don't realize that it doesn't matter what you do for a living, it matters who you work for. So there's been those communication issues. And then, quite frankly, there's been some operational issues over at the PSLF servicer. Most frequent is miscounting the payments. They always end up getting it fixed, but the volume is just so high, it can take over a year, which causes a lot of frustration.
Betsy, you mentioned this is a new bill. It comes out of committee, and so there's a process here. It's an appropriations bill, a little bit different process than getting to especially when you get to the Senate. You just need a simple majority, which
right.
To pull that through. But what are the prospects? What are the steps? The next steps? Can you inform the viewers about that?
Yeah. So actually, as we speak, as we're recording this, there is a hearing about this bill in that House committee that's going on again today. It started at 8 minutes ago, as a matter of fact. So they'll do a markup of that bill. And then we wait for the Senate version, which usually comes out a month or so after the House version of the appropriations bill. Now, if this language or similar language is in the Senate bill, nothing is ever 100% certain, but I think we've got a really darn good chance of it going through. If that language doesn't exist in the Senate bill, we still have a good chance of it going through. I don't think it's not a high cost provision, and honestly, it's a fairness provision. So again, while nothing's 100% certain, I think we've got a good shot at this.
Yeah, well, we'll see. Death and taxes, Betsy. That's what they tell us. Those are the certainties in life. Betsy, I need to take a very quick break. When we come back, we'll talk about loan relief for some for-profit college students. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Betsy Mayat of the Institute of Student Loan Advisors. Betsy, you're chock full of information today. Thanks so much for staying with us this morning.
Yeah, no problem. I love talking about this stuff.
I know. And I love talking about it too. You have a lot of great information. You and the team at TISLA doing some great work. Let's talk about this loan relief program. And I think what's interesting here is that some people were maybe misguided, got some bad information during the recruitment process to come to some colleges, universities, and as a result, didn't have the job opportunities that they maybe should have or could have because of this poor recruiting. And they're getting some relief. And I think that sounds like a really interesting and great thing. But I want to get your perspective about this, Bets.
Yeah, sure. So this is an issue that's near and dear to my heart. There is a provision in the Higher Education Act that led to regulations being written around a discharge process called borrower defense to repayment. And the idea behind borrower defense is that if the school that issued your federal student loans misrepresented their programs, outcomes, or the student loan process in some way, then you as the borrower and you as the borrower were financially harmed, then you are possibly eligible to get some forgiveness or total forgiveness on the federal student loans you took out for that school. Now the process is, since it started, it's sort of been fraught with peril. The regulations were initially put into place under the Obama administration, and then right as they were about to become active, the new the Trump administration came in, and they were, to put it lightly, not fans of borrower defense to repayment. So they sort of put a halt to that process. So there's been borrowers who have been waiting for relief for years. And that's what we saw with the recent announcement, is that the current administration, the Biden administration, does feel that defrauded borrowers should get relief. So they've gone through these pockets of borrowers that attended schools that we know for a fact defrauded their students, and they're announcing relief for those particular students.
Yeah, and for this particular subset of borrowers, we're talking there's about 1,800 students that, and in the article that you and I are referring to, and people can certainly go out and Google and find an article, there were some really bad recruitment practices here, and I encourage people to kind of check it out so you're informed about how to find a suitable college for your son, daughter, niece, nephew, whomever, to make sure that the recruitment practices are in line. Betsy, back to this borrower defense initiative, this sounds to me like it gives the customer a really good opportunity to protect themselves. It really provides to them, if they were harmed in some way, the opportunity to say, look, I didn't get what was represented to me.
It's tricky. It's true. And that's what the intent of it is. But it's tricky. If you attend a college and you don't get the job that you hoped for, that is not a reason for bar defense. If you didn't get the
Right.
salary you hoped for, that's not a reason for bar defense. What is a reason for bar defense is if the school outright lies in their advertisement. For example, if the school advertises that they have a 100% job placement rate, when in fact their job placement rate is only 10%, that could be a reason for bar defense. If the school advertises that their program cost is $50,000 full stop, and it really costs $80,000, that could be a reason for bar defense. Not finishing your program is not a reason. The school closing is not a reason, although there could be another discharge for that, depending on the circumstance. Just you taking out a loan is that you can't afford to pay back is also not a reason for bar defense. So you need to be able to show that the school actively misrepresented something about their program or their institution, and that you were financially harmed by it.
Betsy, it seems to me that when you were ticking off some of these things that are under the borrower defense program, I mean, it just sounds like false advertising. I would think that this really opens up these universities, if they're even still around, to civil penalties, civil suit, outside of just the borrower defense program. I mean, there sounds to me like these are bad actors. Look, people cherry pick statistics all the time for their marketing, but people have to be held accountable for their actions, whether you are a university or an individual, just going about their daily life.
I agree. So when it comes to higher education and specifically student loans and institution oversight, we have what we call the triad of oversight when it comes to institutions. And the triad consists of the Department of Education, the accreditors, and the states. And oftentimes when you do have a bad actor that's a school, you see all three members of this triad go in and take some sort of action. So you'll see like state attorney general's offices filing civil suits against the institutions. You'll see the accreditor pull the school's accreditation, which means no more federal aid. And then you see the Department of Education going in and maybe instituting fines, doing a clawback of federal aid that they got before, maybe issuing these borrower defense discharges and then going back to get reimbursement from that institution. The problem that we have, what started this whole thing was when the monster school Corinthian all of a sudden shut its doors. And they were smart. They knew that the Department of Education was about to take some action. And without notice, they not only shut their doors, but filed for bankruptcy. So any loans that were discharged for Corinthian, for the most part, the U.S. taxpayer didn't get reimbursed because of the bankruptcy filing. So it's a really complicated issue.
Betsy, how do we become better consumers? I think that's, at the end of the day, we've got to educate ourselves, pun intended, about the education system. Where can I go if I'm seeing these claims about a university? The websites look beautiful. The materials look beautiful. They never, the tour that I go on when I take I don't have children, but if I took my niece or nephew in 10 years, is going to be a great tour. How do I become a better consumer out there before I make my selection?
That's a really good question, because consumers need to go into any large financial purchase, which is what higher education is, with their eyes wide open. There are several really good websites that have really good data on them. The College Scorecard, which is put out by the Department of Education, is the first one that comes to mind. You also want to pay attention to high pressure recruiting tactics. If they're telling you need to enroll today, that's a huge red flag. So be wary of that. If you can find some alumni to talk to find out what their experience is, then you want to do that. Try to find out the average starting salary, which again, you can find on the College Scorecard for graduates. Look at the graduation rate. If only 10% of their students are actually graduating, which again is info you can find on the College Scorecard, that can also be a big warning sign, unless it's a transitional school like a community college.
Yeah, really, really great tips. You have to be, it's unfortunate, but you really have to be a good consumer, whether you're buying a car or buying education services like a college from a college or a community college. Betsy, always great to see you. Thanks so much for joining us on the program, and we look forward to having you back again very soon.
Thank you.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for another exciting and educational and entertaining edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.